Protos as a hedge fund is a team of proven crypto investors and traders managing our investors' money. And it is a legal structure, so you could contrast it to something like, say, the DAO, which is a decentralized type of fund on the internet. But so it is a well-governed legal structure with a team of people with a lot of experience investing in and trading crypto. And the strategy that we'll be employing is to invest initially, and this percentage might change, but initially 35% of the assets under management into new protocol tokens at a very, very early stage, and 65% will be actively managed. So using different trading strategies, I'll let Matthew talk about that. So within that 35%, what are we investing in? So we previously invested in 3 out of the top 5 market cap tokens at a very, very early stage, and that was Ethereum, Litecoin, and Bitcoin. Ethereum at the ICO, Litecoin at a very low price, about $2.80, and Bitcoin in the $100 range. We chose those assets because we really believed that the projects were foundational infrastructure in the market, and that is our focus for our early stage investing. We believe that the market is at the stage where the infrastructural layers are being put down. So maybe to use an internet analogy, maybe it's 1998 or 1999. And when those big pieces of infrastructure are built and are successful and are strong, then other applications can be built on top of them. So we'll be looking to invest in, just like a good venture capitalist would, very good, very technical teams at a very early stage, typically investing at a valuation below 20 million, ideally even earlier, into projects that are pursuing projects that will form the fundamental infrastructure of the market to come and on which everything else will be built. One of the key things for us is we do believe we can pick good projects, so we're much more focused on picking quality projects over just picking a whole bunch of different projects. We're not very interested in a spray and pray approach, and we're really looking for great teams and great projects, and so we won't be making likely any more than 1 investment per month at the most.
Yeah, just coming to the active part of the portfolio. So 65% of the portfolio will be invested in the most liquid cryptocurrencies. And for this 65%, we're going to deploy an active management strategy. This will be a data-driven approach. We'll be building our own data sets and using various analytical tools, including natural language processing and so forth. Essentially, the objective of this 65% is to risk manage the most liquid strategies in a way which will prove a better tool than a simple buy and hold approach. We actually believe that the market is maturing very rapidly, and these advanced trading techniques which have been successfully used in other markets, for instance, and I'm thinking here of arbitrage, in particular trend following, and other strategies which take advantage of short-term movements in prices. We believe that this strategy will be applicable also to the cryptocurrency markets, which have been very successfully deployed in other markets. As an example, trend following, I believe more than $320 billion is now deployed in this strategy, and trend following in the past has significantly outperformed other markets in downturns, for instance. So in 2008, trend following strategies were generally strongly positive as opposed to the S&P equity index being very negative. So the objective with the 65% is to deploy these strategies in liquid markets to produce a better risk-adjusted return for investors.
One thing to maybe add to that is the idea of just the very active management of a portfolio. So the crypto markets are becoming quite complex. There's a lot of different events occurring. There's forks, there's security issues to manage. And one of the things that we will be focused on is ensuring that we're on top of course, any events that occur, whether that's a fork or that's different major changes in the market. One thing that we as a fund can do that large holders of crypto may not be able to do as individuals is quickly move from large crypto positions to fiat positions. So for example, we can move from Bitcoin to cash and take advantage of moving back into Bitcoin, whereas some people might not be able to exit large positions in the market, say more than $1 million, when there are major sort of negative events occurring.